Hello, Warriors. How's everyone doing today? Wrapping up the week, a broken up week with holidays. We have another one next week. And we're FX traders, right? So I believe I've talked about examples like this prior to this example in the dollar index. I teach that when a market gives you too many opportunities to play the same zone, whether it's support or trend line, that you should be skeptical. So here we are again. This was one, I'd call this a test, 2, 3, 4, 5 tests of 96 support in the Dixie. To me, it's given people too many opportunities to buy the support and implies that we're going to take it out. I don't know if it's going to be today or next week. Would surprise me if we rally to new highs now before breaking down and electing all the sell stops under 96 and bringing new dollar shorts into the market. If that happens, just a simple measured move is going to take you to about 94.5, 94.25, and then we'll see what the dollar could do from there. One feature in the dollar is the dollar is acting so weak right now that even the Aussie is getting a pop here after making new lows for the move and stopping out people. I think that it's got a chance at least to head to 71, maybe back to 72, which would correct this recent decline of about 350 pips down here. I had a nice divergence here yesterday, so Aussie looking okay. In fact, it's even outperforming the Kiwi, so probably getting some type of bear market rally in Aussie Kiwi to fade. The pound, weaker than euro, but if the dollar's going to break down, you would think it has some more upside. We penetrate 127, maybe we could head up to 128.5 or so. I'm not sure when the Brexit vote is going to be taking place, but right now it hasn't been affecting the markets much at all in the past several days, weeks. And when we look at something like CAD, which has been a superstar to the upside, we are beginning to diverge up here. Last high did not confirm. I know Steve is looking for some type of high in there in Canada. And I wanted to talk about the yen. They had very bad data. Nikkei sold off. So we'll see what happens with the yen. I have a hard time getting short down here in the yen. We are diverging on the 4-hour. We're diverging on the 1-hour. But I want to see what it looks like when the Dixie's 94.5. So actually looks like a little bit of a wedge, but something that I'm not going to fade into a weekend and a broken week again next week. I wouldn't call it broken, just, we have New Year's next week. So looking at gold, and this is something that to me is going to be a focus of mine going into next year. I think that gold's in the topping phase, and I'm not saying it just because I'm not long right now. I'm saying it because of how the gold shares have acted. Here you see, successive new highs in the gold shares, in the gold itself, and then you look at the shares in some of the ETFs, and you don't have it confirming. We could look at, well, here's Nugget. This is 3 times, and you could see we peaked here over a week and a half ago and haven't made a new high. Maybe they could generate another new high in the gold. And here's your blue chip. It's the GDX. Same story, not making a new high with the gold. Maybe we get one on some type of blow off next week. And we allowed for this bear market rally to take the gold up to this level and silver as well. And let's see here. I just want to show you the silver quickly. 1540 or so is possible. It's acting better than gold, but check out the weekly here. Maybe it was a daily. Yeah, okay. So up here around 1540, We have the daily 200, you know, could test it, maybe get through it a little bit like the S&P's got through its 200 week. But, you know, reaching resistance, when you look at it from here, could it be a bottom, or is it just a retrace of this big decline from 1740, 340 down to 14 bucks? So, you know, 170 back would take it 1550, 1560. So based upon what I'm seeing in the gold shares, I'm thinking there could be a very good short setting up. I don't know what the catalyst is going to be for a decline in precious metals. Maybe it's just the dollar breaks down at 96, goes to 4.5 and blows again. So that's kind of what I'm looking at. I think that the cryptos are at a very important crossroad. We're starting to test some fibs on Bitcoin. Okay, so here we go. So we've retraced 61.8 of the move right here. I really like 78.6 because it takes out the 50% halfway backers and the 61.8 players. And let's see what happens here if we get down to 33.60. What I'd actually like to see is one more washout down towards 2800, which would set up a 3 drive and massive divergence down here. So I'm just planning ahead for next year, and I see potential shorting opportunities in the precious metals based upon gold and miners lagging the move in the bullion, and would love to see one more flush under a big round number of 3,000 in Bitcoin, and take a stab at some of the cryptos early next year. So I want to thank everyone for hanging with us in 2018. Looking forward to 2019. Volatility, I don't think is going to die off. I think we're still going to have huge volatility in equities, and I think one way for you to be able to navigate it is to become part of our trading community. And over the holidays, it's a great time to sign up for the trial and risk $1, and for 10 days you could write down all the great research that we have. Okay, so you could have access to the dashboard and hear Amanda's voice every time you log on. And also, it's a good time to consider getting a hold of Forest Park FX, Trent and Justin. And if you didn't do it this year, if you do it next year, because you could, from your trading, just what you do normally, if you're not getting any rebates from your broker, Trent and Justin will arrange for you to do it, either to apply towards your membership or to get a check from your broker every month for the hard work of trading, and get paid for when you scratch a trade, and get paid for when a trade doesn't work out, and have a little bit of a bonus when you're trading well. So these guys are very responsive. You get a hold of them. You're not going to get phone prompts and hold on, what department do you want? They're right there for you to give you the best advice possible, because they know everyone. Look at all these brokers, non-U.S. residents and U.S. residents. Here in the U.S., we don't have a lot of choices, and they're going to make sure that you're not with a FX broker that's not regulated, because the worst thing that could happen is you have a great year and then you try and withdraw funds and it doesn't happen because it's some type of Ponzi scheme or fraudulent FX operation. So make sure.
Yesterday only we sent two people to Forest Park FX, from what I know. So people that go to Trent and Justin are very, very happy with the services.
Okay. All right, buddy. How are you today?
I'm good. By the way, the way you connected hearing Amanda's voice with, if you want to hear it, all the time, and then you pitched in Forest Park FX. I was almost certain that you would say the only thing you have to do is propose to her, so you can hear her voice every day.
And any man would be lucky to have a wife like Amanda
I'm sure
Not just because she's a great trader and would take some of the financial pressure off him, but because she's really a woman of character, in my opinion. So,
that's very true.
what do you think, Steve, going into the weekend? You know, we've tested, I know Blake usually comes up next, but I don't know how many times a Dixie can test 96 and hold it. It's giving people too much time to trade that support area. What do you think?
Definitely momentum is not doing any favors for the Dixie. So yeah, if we lose this area, probably there is more downside to follow. But I don't want to bleed into Blake. I'll be here.
Yeah.
So once Blake is done, I'm going to show you what he wants.
Okay, no guests today, guys. So you know we're
okay.
Okay, so we're going to wrap the week up. Steve, before Blake comes on, what's our schedule for Face next week? Do you know?
Oh yeah, absolutely. We're not going to be broadcasting Monday and Tuesday. We're going to be broadcasting from Thursday onwards.
Like this week.
Sorry, from Wednesday.
Okay.
Sorry,
so the only change is we're coming back a day early. The day after New Year's. Okay. Yes. So, all right, guys. All right. So this is our last broadcast until Wednesday of next week. So I want to wish everyone a happy New Year, and that everyone has a great year, and that pips rain down on them. And thank everyone for hanging out with us in 2018. It's been our mission to build you up and edify you every day. Hope our mission is accomplished, and we're looking forward to 2019 to be a great year for everyone that's here in Face and our trading community. So become part of it, immerse yourself in it. If you haven't done it, make a New Year's resolution to give it a try. You could always make the decision to not stay if you don't see value, but you're not going to know until you try it. So with that being said, Happy New Year to you, Blake Morrill. How are you, buddy?
Hey, Coach. How's it going?
Good. Happy New Year, man.
Happy New Year to you. Yeah, it's been a very, I want to say 2018 was not, in my opinion, a easy year to trade. It has been, the volatility that we've seen has mostly translated into equities. So the FX market has been kind of, it's been more sideways than anything. I think there's a lot of cross currents that are just pulling the market one direction or the other. Going out to dinner with the guys from my office who are really some of the best currency traders in the industry. They're like, they're really looking forward to this next year. They think this next year is going to bring a lot of volatility for the FX market, where we've been kind of sidelined as the equity markets have been really, showing a lot of volatility. So that's what we're hoping for.
What do they think is going to take us out of this morass of sideways trading? Any catalysts that you guys talked about that's going to change it?
No, not really. Other than the percolating issues in the EU.
Okay.
But I think that we've got similar issues in the United States. So I think it's which one surfaces first. Which is going to be the one that comes to fruition first. It's going to be.
Okay.
It's hard to say. And if you look at the charts, it's just as challenging. Not knowing it at the moment. I look at the euro dollar, and this sideways action that we've seen in the euro dollar for the last. I mean, look at the last several months. I mean, we've just been from a 1.8 to a 1.12 range. And just very, very choppy. And I think. Yeah, it feels like it, but again, it's the push pull between two economies. You've got the Fed, who's probably getting close to finishing this rate hike cycle, and then you got the ECB is hoping to wind down their they're winding down their quantitative easing, so everybody's neutral, if you will, but does the ECB have room to actually start raising rates? And that's the question. And or does the Fed get to a point where they have to start using bullets, if you will, to make sure that the economy stays on track. So using some of those bullets that they put back in the ammo box, if you will. So it has been challenging. I mean, you look at the sideways action, even for the last few months. I mean, we haven't gone anywhere. It's been such a tight range. And I look at the euro right now, and I'm just hoping that we break 115 or we break this 113. Either or, I don't really care. I just want to see a little bit of volatility here. Now, speaking of volatility, some of the volatility that we're getting is like in the yen. The yen is extremely weak. We closed above the 200-day or right at the 200-day moving average yesterday. You can see we've slumped despite futures being stronger, which I'm quite surprised that we woke up this morning.
Very weak data out of Japan. They're still in the morass of weakness. They're worried about inflation going negative again.
Yeah, but how does that normally, and has it ever really affected the yen much?
Speaking of that, Japanese 10-year yields hit 0% during the past few hours for the first time after several years. So that's also not a good sign, having to do with deflationary pressures. I mean,
right. So is that yen positive? Is it really? Does it warrant to be yen positive? I don't know. But the dollar yen is weaker. We're sitting right at support, and when you take the S&P that's had this nice little V-shaped recovery off the lows, I'm surprised that the dollar yen isn't a little bit higher as a result, and the yen a little weaker. But it's hard to attribute what you're seeing here on the screens, really attributing it to a strong correlation in the market. I think a lot of this is end of year flows, so, end of month, end of year flows. So you're seeing, this just dollar yen weakness that probably has nothing more to do than just flows that are hitting the market as we speak. And I don't know if that's going to translate into euro dollar strength, or if we're going to see any movement in cable. I mean, the cable's still stuck below the 127 level, which I think is really key resistance. The Aussie trying to get a lift off of this support. I mean, it's desperately trying to come off the support. As I wrote yesterday, I mean, the risk reward, if you look at the Aussie, the risk reward is for longs. I mean, it just is, we're down here. It's like, okay, well, being on the long side of the Aussie dollar down at these levels makes sense. I'm not long, but I mean, it's just sat here for like the longest time. So we'll see if we get any little bit of lift here. One of the other things that I think was pretty key yesterday is the price action in the S&P. We had a bullish, engulfing candle or an outside day, and we had a really big recovery at the end of the day yesterday in the S&P, and that has also allowed for another bounce today, and we're coming up to the breakdown point. So I think this 25 level in the S&P is going to be very key for the market. So I'm interested to see how the market responds up here. I actually think that, and I know I have a pattern in play from yesterday in the S&P, and it's looking at 126. I actually think that we're gonna squeeze the market a little bit further, make it up towards 126, and then before reversing again. So I think that's pretty possible in this market at this point. These V-shaped recoveries in the stock market are bear market rallies, but they are also pretty convincing too. So it tends to squeeze a lot of people and get them excited about the markets once again and be just before a failure. So I think we still have some room to the upside in the equity markets. you know, the dollar Canadian continues to be very strong. Crude oil is weak. We've talked about this dollar Canadian and how just dang strong it is. I mean, the thing is just unrelenting strength as we're sitting here at channel tops. And the relative strength, or excuse me, relative strength is divergent, but the DSI in the Canadian dollar is at 9, so it's very extreme as far as bearishness. So that could risk a reversal at some point where the Canadian starts to strengthen. But I think we have to see crude oil show some signs of strength before we can see the dollar Canadian roll over at all. And I've been really surprised that the dollar Canadian has been as resilient as it has been, actually, which is quite surprising.
It's also more weird because the NOK has already started showing some signs of rolling over, but you know, which is also very strongly correlated to crude. But CAD really doesn't want to do it, right?
No, I mean, the Canadian is just very, very weak. And like I said, I do expect it to eventually roll over. You know, but, you know, as far as I'm concerned, we have to break through 135.70 before, you know, it opens up downside back to the 135, 134 level. So yeah, it's been much stronger than I expected. Even this morning, I mean, we were trading below 136 when I first sat in front of the computer, and then this rally out of nowhere just just ripped for no apparent reason. You know, but again, it's not. I have to keep pointing towards crude. I mean, crude is weak, and you can see crude is just remains you know, very, very heavy as far as the way it's trading. But you know, I'm not too excited about anything right now. I think the dollar yen is sitting on support here. You got to watch the dollar yen. As long as stocks continue to say, you know, bid, and especially going into the weekend, if stocks remain bid, you know, the dollar yen could very easily be back at 111. You know, by the end of the session, I think that's entirely possible. But everything else is very quiet, and I'm not. Again, I'm gonna reiterate. I can't get too excited about the euro dollar until we get above 115. You can see we're challenging this nice little downtrend line that we've been following pretty closely. You can see it right here. You know, we've been following that pretty closely since back in March of this year, and so that trend line is really capping the euro dollar rallies as of right now. And I think that's gonna weigh on the euro. We have to get above 115 before I can get excited about any further dollar weakness. And you look at the dollar index, and the dollar index we've talked a lot about. You know, the potential of it rolling over, very divergent relative strength. Relative strength is actually pointing lower, but it's not getting a really big foothold to the downside just yet. So, you know, it's trying to roll over, and, you know, maybe this is just this was like the last gasp of the dollar index, but it's hard for me to, like I said, it's hard for me to get really excited about it as we go into the year end. I mean, a lot of these flows that you see in the markets are going to be just purely flow related, and not so much you know, a real reason why we're seeing one move one direction or the other. Another currency I guess we should talk about is the dollar Swiss. The dollar Swiss is actually getting beat down, and we're below the 50% retracement. We're below the 200-day moving average. The dollar Swiss has just kind of been a failed rally attempt at some of this resistance above the one, you know, the parity level. It looked like it was going to break out. Now it's rolling back over again, and that might have more to do with some risk aversion more so than anything else too. So the dollar Swiss, as we approach 97.50, 97.20 down to this trend line, is going to be very interesting to watch, in my opinion. And that's really, you know, what I'm looking at right now. So Steve, as far as the currency market and the dollar, what's your feeling going into this next year?
I expect the dollar to, at some point, to roll over and die, in essence.
Okay.
But that doesn't mean that it will happen, from here. Of course, we are at a risk in the short term of, posting some kind of a correction in the dollar. But I wouldn't exclude another push higher at some point. But I believe that before the upcoming year is over, we will have seen a strong bear market in the dollar. I don't think that there is much of an alternative. Although it's always tough to make predictions that have a medium to long-term horizon. But any way I look at it, I can't see how the dollar would continue strengthening in the year to follow. For at least such a long period of time. From a fundamental perspective.
Right. I mean, the dollar, if you look at like the economy, the U.S. economy seems to have run its course, as far as the strength, the outperformance of the U.S. economy. And it looks like, economic data is starting to take a turn for the worse, and it's starting to round the corner, if you will. But, and so, you could argue that, well, the dollar, has really gained off the heels of a stronger U.S. economy, the outperformance, the Fed being more aggressive as far as their monetary policy goes. But can you really make a case that can you really make a case at this point that other economies might be doing better, and I can't really. And I think one of the other things that we need to get past this next, the beginning of this next year, going into January, is what happens with the UK, and if there is a Brexit deal done, I think that's going to be really positive for the cable, and more importantly, it's going to help the euro along. So that might be the catalyst that drives the dollar lower going into going into the beginning of the year. But we really that all hinges basically on the EU and UK coming to a formidable agreement, which still is questionable at this point. So I think that going into next year is probably what's going to be the driver, at least in the first quarter of next year.
Don't forget the Fed, Blake. I mean, I think everything is Fed centric, and I really do think that the Fed would be willing to have a weaker dollar to support equities because of the stock market.
Willing? I don't think that's even the right word, Coach. In the sense that they're not going to be just willing; they're going to be forced. We're going to be forced to have a weaker dollar. You know what I mean?
To save the market, because it generates tax receipts for the government. So to support the market, and they are wealth effect sensitive. Let
me just remind you that in the first 2 months of this fiscal year, the U.S. has been running an official deficit, if we annualize it, of $1.62 trillion. So if we project the deficits that we've had for the 2 first months of the fiscal year ahead, that's 1.62 trillion. And I want to remind you that last year's official deficit was less than 800 billion. And despite that, we have the US having to borrow 1.3 trillion because the budget is more or less a joke, in the sense that when the official budget shows a deficit of 770, 780, something like that, but you need an extra 500 billion to cover off-budget items. I mean, theoretically speaking, somebody that has no idea, if you ask them what percentage would you assume that off-budget items are, they would tell you 2%, 3%. You know what I mean? And that would be, a proper assumption. But when you have off-budget items being almost as large as the official deficit, imagine with the official deficit running now during the first 2 months at 1.62 trillion, what the equivalent would be, taking into account last year's official budget and the need to actually finance the government, right?
What is it, about 50%, Steve? Off budget, comparatively?
I mean, if we take the same numbers, I would assume that the real deficit that, projecting forward from the first 2 months and annualized would be roughly close to 2.5 trillion at the moment. And we're still talking about an economy that, theoretically speaking, is during an expansionary phase, and the US being not being in a war with anybody at the moment, right? So not having like extra expenditures due to some kind of war effort or whatever. So imagine what's going to happen when the fiscal stabilizers start kicking in. For those that don't know, fiscal stabilizers are, for example, when an economy goes in a recession, suddenly, first of all, you have two things happening at the same time. Tax receipts are going down. By the way, speaking of which, tax receipts have been going down for a long time now, which is also a sign that something is not going well with the economy, because when an economy is performing well or better, you expect tax receipts to go up. Oppositely, tax receipts have been going down for many, many months now, right? And at the same time, during a recession, what happens is entitlements go up, because a lot of people now start claiming.
Read Constantino's comment right there.
Kostas, by the way, is a colleague of mine. We used to go. Yeah, equities were a
Happy New
nightmare.
Deutsche Bank default and Brexit will be hard. Happy New Year.
That's Konstantinos. I thought you meant the other Konstantinos.
No, the one in our audience.
Yeah, the other Konstantinos.
We have an optimist in face.
Yeah. So in all honesty, you imagine that when we enter the next recession, just by fiscal stabilizer kicking in, the U.S. deficit should explode northern of 3 trillion. So, question: who buys this debt afterwards? Who does?
The Fed.
Exactly. There is no other buyer left for such a quantity. And even if there were, that would immediately destroy every other economy. Why? Because it's the so-called crowding out effect. I mean, if we assume that people are willing to finance the U.S. government, that means that less money is available to finance, other debt that's going out there, which is an issue. So a weaker dollar is not only going to be the only solution out for, the U.S. economy in the short term, but it's also going to be, because Blake asked that question before, if the U.S., does bad, who's going to be doing better? The emerging markets are going to be doing better because they have a lot of debt denominated in dollars, and the weakening of the US dollar will definitely take off a burden from the emerging market economy. So that's where I think that value is going to be in the next cycle to follow. Now that doesn't mean that it's going to start like this month or next month, but if you want me to make a medium to long term assumption, that's where I think value is in the emerging markets.
Okay, Steve, you're always so neutral.
Yes, and by the way, hey Steve, I'm gonna pass it over to you. But hey, I want to wish everybody a happy New Year. And I want to thank everybody that supported us throughout 2018. And for those of you that are looking to join us in 2019, we welcome you into our family. We hope that you join us in our community, and you're in our in our private chat rooms, and you get all of our analysis on your mobile devices and Paulie in the morning in Europe. You get the European crossover. For those of you that are in European trade and you want to hear Paulie live, he's got a special private webinar that's only for our traders. He was just short the euro and just closed it out for 25 pips. So you got people like Paulie that are pulling it together on days that are very tough to navigate for most people. So thanks everybody for all your support, and Coach Steve, and Velu, because I know he's listening in. Happy New Year to all you guys. Thanks for being part of our team.
Happy New Year, Blake.
Thank you, Blaker.
Happy New Year, and enjoy the football Saturday.
Yeah.
All right, Steve. Well, I mean, okay, we have the broad strokes now. So if you think it's going to be emerging markets, are there any currencies that we could play next year to follow that narrative? What do you think would be, besides short the dollar, anything we could be long to take advantage of? And it'd probably be everything but the dollar, but anything in specific.
Having to do with developed economies, it's not an easy call to make right now, because we have a lot of question marks having to do with the European economy. It has to do with, how much of an effect populism is going to play in Europe, because I do believe that Europe, I know that it sounds like a joke, but I do believe that Europe is in a better fiscal state than the US, a far better one, but they have a huge chance of imploding just because of political hiccups and issues and a lot of tension. The problem with the European
Southern
Union,
Europe against Northern Europe.
yeah, exactly. You know how it is, those divergences. The problem is that the Eurozone started as a fine experiment under good. I mean, it started as a fine experiment, and it started as a good idea when things were rosy. And the whole concept was that eventually that would lead to the Eurozone becoming more or less what the US is now, like some kind of a broader based, let's say, federal state where, the budget could be more centralized. There could be like some, so
it didn't happen. So, Martin Armstrong has been saying for years it was a experiment doomed to failure just because of that reason that you just mentioned. Is it was more of a monetary union instead of a fiscal union.
Although, and as you know very well, as a nature, I'm not an optimist. I believe I'm not a pessimist as well. Sometimes I sound like a pessimist, but I consider myself to be a realist. So, sometimes when things are just not looking good, I'm going to say they're not looking good. That doesn't make me pessimist. That makes me realist. So, equivalently, I know that this opinion might sound as an optimistic opinion, but I do believe that the next time the Eurozone will get in real trouble, there is also the probability that it's going to be forced to actually complete the union instead of breaking down or breaking up in this case as an alternative. So,
okay. I was thinking kind of like, Malaysian ringgit, Singapore dollar. I mean, something, currency in that region that might be the way to go to take advantage of, this being Asia's century that's developing, and all the growth happening over there.
India.
Yeah. Okay, so the rupee, and so there will be Asian currencies that they're not that as liquid as the majors, but
you know very well, Coach, that currencies are a zero-sum game, right? Yeah. I mean, you can't have all the currencies getting devaluated at the same time, because currency rates are always X currency versus Y currency, right? So mathematically speaking, it's impossible for all currencies to be depreciating, because they're going to depreciating against what? Of course, they can all be losing. Exactly, that's what I wanted to say. They can all be losing in real value at the same time, because let's say we might get some kind of a global inflation, but against each other, some of them have to overperform, right? Against each other. I mean,
that's why Elliott-Tishon say everything in the FX market is corrective. It's not impulsive for that reason.
In a sense, you can say that. Yeah, you mean in the short term we have a lot of moves that don't definitely look impulsive. So that's why the currency market has been hard to read. For example, Blake mentioned before very rightly. So just look at this today in the Euro USD, for example. By the way, Kostas Christopoulos, let me know if you have a microphone. I would gladly give you the microphone to share some thoughts of what you're looking for, but just make sure that you have a headset.
I like that parabola green line you drew there.
Yeah. So no, that was actually the potential of a head and shoulders formation.
Oh, I see. Okay.
Yeah, but the more elongated this right shoulder becomes, the more we lose symmetry, the less likely it is for something like that to play out. Right.
Does it kind of look like silver did, Steve, right before it broke out? Kept testing that resistance, testing it, and finally had to get all the shorts to cover over, I don't know, 1480 or so.
That is indeed the case. And if you remember, yesterday, I very specifically said once again that I'm looking for the USD Swiss to break down. Now, I would have said, that the Euro USD at the same time might be breaking higher. But, I believe that it's much more likely for the USD Swiss to break down than the Euro USD to break higher, simply because the USD Swiss has a much clearer pattern to read, because we got like one move lower, a triangle, and I think that one move lower, the one that's currently unfolding, is missing before we can get a resumption perhaps of the upside. So I do think that we're going to hit this confluence of supports at the 61.8. We might even go a little bit lower towards 97. But I would expect for the USD Swiss to find some kind of a support there. Now, during that period, is the Euro USD going to break higher? It might do so, but look at it once again today. It's trying to push above the 114.50. That's why I like daily charts, because if you go down to a 4-hour chart, for example, you can see it here very clearly. If you go down to a 4-hour chart, you would have guessed multiple times. Initially you could see this like a triangle here. Then you would have assumed that this is a break up, a break higher. Then you would have assumed that we were breaking higher here and then today. But if you look at a daily chart, it takes away the noise, and by taking away the noise, you see very clearly that this 114.50 area of resistance on a daily closing basis has been rock solid, right? So unless we see a break above this confluence of the 38.2% fib and the horizontal support resistance area at 114.50, I don't see why somebody would want to jump on this pair and look higher. Now, yesterday we made one more good call. It had to do, if you remember, I said yesterday that a retest of 2400 is going to be a nice buying opportunity for.
You know what, Steve? The day before, I tell you, this is really. I mean, I was thinking about it, but it seemed too simpleton to mention. But the prior day, the big rally was 1,000 points, right? In Dow.
In the Dow,
It pulled back 500. The S&Ps, I forgot how many handles it was, but it pulled back 62. And then the big recovery happened.
Yeah,
isn't that amazing? I mean, you didn't even have to have points on the chart. You just knew, well, it gave half back, buy it. It gave 61.8 back, buy it.
Yeah,
it was amazing to me.
The fun part is that I predicted that the retest of 2400 would be a nice buying opportunity, but I wouldn't have guessed that deep to 2400.
Yeah,
and
the same day.
That was just unbelievable. I mean, within like 1.5 hours, we went from like almost minus 3% to close positive. So that I didn't expect. I expected that 2400 might find some buyers, but I expected that it might take us a couple of days to make it down there.
Well,
and
the 1 hour pullback looked pretty corrective. Looked pretty corrective on that pullback. If you look at the 1 hour before it took off again, looked like an ABC yesterday.
Let me see. Let's go down to the 1 hour. Yeah, it does look like. Yeah, it does.
Or the 4 hour, maybe it looks like it more. Yeah.
And then inverted head and shoulders formation on the 1 hour as well. You can see it here, with neckline being at 2480. So yeah, can be like that. Now, what I had said is that the next target is up here at 2550. Let's see if we're actually going to make it at 2550. I think there is a decent chance we're going to make it at 2550. But I think that's where it's going to start. The recovery is going to start getting much tougher. I think that there's going to be a lot of selling interest if we make it up there, especially if we make it up to 2600. So I remain of the opinion that selling on rallies is the way to go, at least for the weeks ahead. Now, having to do with cable, nothing has changed. Now, having to do with the USD yen, I'm not really surprised that it got rejected from there. If you remember, Coach, yesterday I mentioned that USD yen is actually finding it tough to overcome this previous support area, now acting as a resistance. I actually, Blake had some guests, so I had to do the chart of the day for those of you that don't know.
It was a good one. It was a good
ForexAnalytix has some free parts you can check out without even being subscribed. One of them is the blog post. So yesterday I chose the chart of the day being the USD yen, and specifically I mentioned here that first of all, the title is USD yen can rebound in the short term, but the bounce might not be sustainable. And then I'm mentioning here that, after finding support at the confluence of supports, there are now two possible outcomes from here. A, we're forming an inverted head and shoulders formation, in which case the pair can move back to retest the 112.30 resistance area, or even the broken symmetrical triangle support as resistance. Or B, we're simply forming a triangle, in which case we should break down without producing a stronger rebound first. A daily close above 111.40 or below 110.30 will confirm which of the two technical scenarios is unfolding. So I think it's very relevant.
Now you're getting the 10. You'll probably get, well, it's closer to the 10:30 anyway.
Yeah, it looks very likely that we're just getting lower from there, or we might get the second scenario, but needing a little bit more time to unfold. So we might rebound a little bit from here. We might try to rally, but this time not even make it to 111.30. So we might, produce some choppy price action for a few more days and then just break down from there. But I really believe what I wrote in the title, because the main point there is in the title, that I believe that any of these scenarios will show that at least the next move is lower. So
94.5 Dixie and 108 US dollar yen. What do you think?
I think that we're going to at least retest this low at 109.60 in the USD yen, if not lower. But I really do believe that. I really do believe that the market is going to hunt down this area, and very well that once we go to this area, at least we have to take out the stop losses below there. Even if that requires just a spike, right?
Yeah.
You know how tricky the market is.
I'm thinking if the dollar breaks down, and this is already broken down, right? So it's leading the way. So if the dollar can pull back to 94 or so, I think you have 108, 107 US dollar yen coming sometime in the first quarter. That's my notes for Pinkert for 2019.
That can definitely be the case. By the way, Konstantina Christopoulou, I haven't had an answer from you. If you're still here and you have some ideas to share with us, I have more things to talk about. Just want to check if you're up for it.
Oh no, I just love to interrupt you. So you keep going, so I could continue.
No. Yeah, no worries. So, we have a question about Europound. What I think about Europound? I think that the Europound is in a triangle, and I think that the next leg for the Europound is very, very likely to the upside. So I do believe that there are high chances that the Europound is going to take out the previous highs here. So I would definitely not be short the Europound here. Because we had a friend asking for it. That's why I'm answering that. Now, we have Kostas asking, another Kostas asking for to have a look at Deutsche Bank chart. Yes, Deutsche Bank is a freaking mess. You can see it here. I mean, this is such a bear market, right? By the way, Deutsche Bank is at all-time lows. And it's extremely likely that Deutsche Bank during the next crisis and the next recession is going to fail. Now, of course, I don't expect that the German government is going to let Deutsche Bank default. The likeliest scenario is that they're going to merge Deutsche Bank with Commerzbank, which I don't think is going to be enough to save either of those. At the same time, they're going to have to build some kind of a bad bank, offloading assets, liabilities actually from both those banks in order to save them. But of course, before that happens, all the equity holders and the vast majority of the bond holders will probably have been wiped out first. So Deutsche Bank in a very, very, very serious risk of collapsing. It's a vicious cycle. It has already entered, a long time ago. And
I think news, Steve? It's in the U.S. news now. Okay, because the investigation, and they're saying that the Trump organization, the only bank that really did business with them was Deutsche Bank, and Deutsche Bank has had problems with money laundering. So it's really interesting after a huge decline in bear market that now you're even starting to get Deutsche Bank talked about in the U.S. news. Never seen it before.
Yeah, just look at this. I mean, even if we take the post post-Great Recession high, which was almost at $80, and look at where we're trading now. I mean, imagine, and theoretically speaking, we're still in an expansionary phase, and we're currently trading exactly at 1/10 of that price. Imagine what's going to happen when the economies go officially in recession to Deutsche Bank, right? Imagine when the liability, many of its current assets are going to prove to be like bad loans and liabilities, right?
Don't they have the biggest derivative book in the world too?
Oh yeah, by far, yeah. It's like a few trillion, something like that. It's
astronomical.
Yeah, it's astronomical indeed. Indeed, it is. Let's see. Oh yeah, there was one pair that I know that a lot of people are not even looking at and they don't care about, but I think it's quite interesting before I go to more popular ones, and that's actually the CAD NOK. So the CAD NOK, as you see, it spent a long time, I mean, since the end of 2014, trapped in essence in a range, right, between roughly 605 and 660. We had like some spikes, like intraday spikes above or below, but that's the range we kept holding. And then at the beginning of 2018, we actually made it below here, which temporarily proved to be a bear trap. But following that, we've had a recovery that looks very corrective in nature. And now we're about to retest this. It looks like a wedge, right? Anyhow, it definitely looks like a corrective. I mean, this move lower was clearly looking impulsive. This move higher clearly is looking corrective, and we're now about to test this key support area. So I think that once we make it below here, CAD NOK is going to be a nice short, which means that that's going to be a good indication for you, coach, that I know that you like it. This is also a three drive formation, right?
Yeah.
You can see it clearly here in the RSI, right?
Right.
I mean,
and they usually
lower
do
high, lower high, lower. Yeah, exactly.
Nice.
And
nice.
Yeah. So I think that this also will be a good indication once we break down that, whenever you're looking to actually be short the US dollar, for example, against the CAD or the NOK, probably the NOK is the place to be and not the CAD, because once this breaks lower, you can expect the overperformance of the Norwegian kroner to be sustained for some time. And that doesn't come as a surprise, considering the fact that Canada is tightly correlated in many aspects with the US economy, while Norway has a very, very healthy economy, low debt, almost a 1 trillion sovereign fund. I mean, it's one of the healthiest economies on the planet. So, it should come as no surprise that, the NOK might spend, a long period of time overperforming the Canadian dollar. I mean, fundamentally speaking, it's also the path of least resistance, right? So yeah, I just wanted to, to show this because it's now coming at a critical phase, from a technical perspective, at least it's coming to a critical phase. You can see it here. So I think this is a pair that is worth monitoring in the days to come. Now, let's have a fast word about the metals. Ziggy says also there is a sealed indictment going to the US Supreme Court next week. We don't know what bank or which country. Thank you, Ziggy. Thank you. I actually didn't know that. So gold is having trouble actually closing on the daily above this trend line support, this time acting as resistance. It's making an effort. This is the third consecutive day that it's making an effort. Let's see if it's going to manage to do so. But one thing is for sure, silver has made it above this confluence of resistances at 1520, and it's now facing the 200 daily moving average. As you see, it's just a few cents above here. The next area of resistance after that is at 1560, the 50% fib. Also, you can see some previous resistance here. So silver definitely overperforming now. And as you see, coach, because you were asking about it yesterday, gold silver ratio has really turned lower and it seems to be gaining some momentum. So I think that it should at least make it look at this nice confluence of supports in the gold-silver ratio. The 200 daily moving average is here. Horizontal support resistance area is here. So roughly that's roughly at 81.50. I think that there is no real support until we make it to 81.50. For those of you that if you want me to explain what 81.50 is, currently you need 81.5 ounces of silver to buy 1 ounce of gold. Okay, so the interpretation is quite simple. That's exactly what this ratio means, right? So now we covered this as well. Let me show the USD NOK, because the USD NOK, as the USD CAD was testing confluence of resistances, but oppositely from the USD CAD, as you see, the USD NOK is rolling over very nicely today. And putting things in context, we have 2 consecutive days that the attempts of the bulls to push the pair higher failed miserably, and this is very obvious from the very long upper wicks that we had in those daily candles. And today we have a very, very nice Marubozu closing black so far, at least. So USD NOK really in danger of rolling over here. So USD NOK looks good to the downside if we close the day in such a negative note as we seem to be trying to do so so far today. Okay, USD SEK also rolling over once again, but keep in mind here USD SEK still trading within a symmetrical triangle. So I would want to see a break either below this trend line support or above this trend line resistance to to start believing that something is happening. Until that happens, I think you should just remain patient and not jump the gun with this. Let me see if we have any more questions. Systemic risk and the GDP of Germany not at its best. Yeah, but the German economy probably remains from the very big economies, probably remains by far one of the healthiest ones, right? I mean, the German economy on its own is doing very, very well. Now, Deutsche Bank, yeah, obviously in a bad condition, but Germany itself so far not bad at all. Yeah, we have a question about copper. Let me cover it. There it is. Okay, copper retesting this broken trend line support as the resistance once again. Let's see what's going to happen from here. For me, it remains a good risk-reward opportunity to the downside as long as we're holding below this horizontal support resistance zone. So I would really want to see it rolling over from somewhere here. We've made several attempts to actually break back above again this trend line support. So far we failed. If we keep failing, I think that bulls will give up, and then we'll have some continuation to the downside. So let's see what's going to happen from here. Let me see if I lost any questions. Bonds, yeah, thank you for reminding me. Let's have a look at the bonds. Okay, Bund remains, I can tell you in advance that the Bund remains at a very key juncture. Here it is. You can see how critical this area is. If I zoom out, there it is. So as you see, this is a very long-term formation, which if we decisively break to the upside, especially if we break above this horizontal support resistance area, let's say roughly 164, then we can be speaking about a very bullish technical break. But until that happens, there is still the possibility that we're going to see more weakness before we finally break to the upside. So definitely the bunds are currently at a very, very key juncture. Now, having to do with U.S. Treasuries. U.S. Treasuries got rejected from this previous high, the 38.2 as well, but they're now pushing higher once again. So I wouldn't be surprised after some consolidation here if we produce one more leg higher. As you see, we have some confluence of resistance zones anywhere between 122.5 and 122.75, and that might prove a tough area to crack to the upside. So I do think that we might have some more strength coming through in the treasury market. in the short term, but I want to see what's going to happen from up there afterwards, because it's too early to dismiss the big bear market that we've had for a long period of time and say that we've actually found the bottom. I think we need a lot more evidence to to talk about that. So if we don't have any more questions, let me see. USD-ZAR, yeah, I can definitely have a look at it. I don't think much has changed. The USD-ZAR is coming back to retest. I want to see what's going to happen actually from here, because if we find some support here, then I think there can be more strength coming through in the USD-ZAR. So I'm looking at this confluence of supports. I want to see if that's going to actually push the market higher once again, because this looked to me very corrective in nature. You can see this move lower looked very corrective. So I wouldn't be surprised if there is more strength to come in the USD-ZAR market in the short to medium term. I think we're going to soon know about that. Crude, yeah, absolutely. Let's have a look at crude. I'm still long crude, by the way. I'm still in the money. Here it is. I think that crude should push higher once again. First of all, let's delete all that because it has already happened. I think that crude should push higher from here once again. I would want to see at least one more leg higher towards this previous area of support. At least. Okay, so I'm looking for another push higher towards 48.5. We can even potentially make it up to 50. Okay, that's what I would want to see. That's why I'm still, I have a cost average of $44. I would really want to see another move higher, not only because I have, when I say I would want to see a move higher, I don't mean I want to see a move higher because I'm going to make money. I'm talking theoretically here. I mean, from a technical perspective, I would want to see at least one more leg higher to feel that this move, makes sense as a corrective move. That's why I'm also long. Okay. So I have a friend asking here for the Kiwi CAD. So let's have a look both at the Kiwi and the Aussie CAD, since you mentioned it, because we haven't done so in a long time. So Aussie CAD, quite an impulsive move higher. You can easily read 5 legs higher here. So I'm expecting that this move lower is corrective, and we should push higher from here eventually, even if that means after a deeper correction. Kiwi CAD, after a false break lower from a symmetrical triangle and the retest of that low, we had quite an impulsive move higher, and we seem to be consolidating now in what looks to be like a triangle. So my assumption would be that this is going to be very likely result to the upside for at least one more leg higher before a deeper correction. Okay. The more we see price action unfolding here, the more it looks like a triangle. So that's my point of view on the Kiwi CAD. I haven't heard back from Costa, so I'm guessing he's not listening in at the moment. I know he's working at the same time. So if there are no more questions, I want to wish everybody a happy new year to you and your families. Most importantly, I wish you good health, and everything else, everything else can come through hard work and a little bit of luck. Thank you very much, Coach, for a very productive year. Having you with us is always a pleasure. And we're going to see you again on Wednesday.
Thank you, Steve. And, I'd like to wrap it with this, right? May old acquaintance be forgot and never brought to mind. May old acquaintance be forgot, and no to old lang syne. Don't just count your pips, count your blessings. We're going to kick butt in 2019. See you, Nostrovolgi. Thank you, Blake. Really enjoyed working with the team again this year. It's made me better. Surround yourself with traders better than yourself and hang out with us in 2019. Enjoy your New Year's, everybody. And really count your blessings. I saw a tweet the other day. It says that Someone is praying for what you are taking for granted. So don't take it for granted. See everyone Wednesday. Good hunting the rest of the day, and enjoy your weekend and New Year's with your loved ones. Adios.